Hi everybody, welcome to Christensen Wealth Management. I'm Michael Christensen. Thanks for taking time out of your day to watch this stock market update and industry sector review for the week ending Friday, January 26th, 2018. Before I jump into those stock market charts, let's take a listen to the quote of the week. This week's quote was said by Oliver Napoleon Hill. And if you don't know who Napoleon Hill was, he was born October 26, 1883, died November 8, 1970. He was an American self-help author. He is known best for his book Think and Grow Rich, published in 1937, which is among the 10 best-selling self-help books of all time. I highly recommend reading that book, by the way. Everyone should. Napoleon Hill once said, "If the winds of fortune are temporarily blowing against you, remember that you can harness them and make them carry you toward your definite purpose through the use of your imagination." Wise words from Napoleon Hill. All right, let's take a look at those stock market charts, starting with the Dow Jones Industrial Average. Here is the 6-month chart of the Dow Jones Industrial Average. And as you can see, it's still in a nice, steady uptrend. Haven't really had a chance to break down, no indication of weakness. The price in black is still pointing up. The 5-day moving average in red is still pointing up. 20-day moving average in blue is pointing up. And the 50-day moving average in purple is pointing up. So we have short-term strength and intermediate-term strength in the Dow Jones Industrial Average. And currently, no sign of any weakness yet. Here's the 6-month chart of the S&P 500. It looks pretty much the same as the Dow. Nice steady uptrend. No sign of weakness yet, and you certainly cannot take this little tiny blip here on the 24th of January as any sign of weakness yet. More of a sideways move, really. The 5-day average is above the 20, and the 20 is above the 50. So as far as the S&P 500 goes, we still have a lot of short-term strength and intermediate-term strength. Here we have the 6-month chart of the Nasdaq 100. Much the same story as the other two, except we have this nice uptrend here that began on December 29th, and certainly no real sign of any weakness. The day of January 24th had a slightly bigger downtick, but the price in black is still above the 5-day moving average. So we have the short-term strength with the 5 above the 20 and the intermediate-term strength, which is the 20-day moving average over the 50. So no major or really any sign of weakness yet for the Nasdaq 100. Now we take a look at the industry sectors, beginning with the 6-month chart of the S&P 500 Telecommunications services. And about a week ago, I had brought to the attention of my viewers that we had this top in the telecommunications that was starting to drop. Well, it looks like we bottomed out for the moment here on January 16th. And since then, it's been in a nice steady uptrend, and the price in black here has been above the 5-day moving average in red for about a week. So currently we're in a nice uptrend. 5-day moving average is pointing up, and if the next few days continue upward, the 5-day moving average in red will cross above the 20-day moving average in blue. So as of right now, I'd say we have a neutral situation, but if those lines cross, then we'll have a short-term strength again, and we have intermediate-term strength already, which is that blue line, the 20-day moving average above the 50-day moving average in purple. Here we have the S&P 500 Materials Stocks Index, looking pretty good still. About a week ago, we were probably somewhere about here. So really it's just been a sideways move for the last week. But the 5-day moving average still above the 20, and the 20 is still above the 50. So short-term strength and intermediate-term strength for materials. If we have another upday, another few updays here, we will rise above the high on January 12th, and may make another leg to the upside. We'll just have to wait and see where we go on this materials index for the last week of January. Here is the 6-month chart of the S&P 500 Information Technology Index. Looks very much the same as the Nasdaq 100 because they are filled with many of the same stocks. We had a nice bottom here on the 29th of December, and then boom, shot up, and we had a down day on January 24th. But the price is still sitting right on the 5-day moving average, so really we have this short-term strength with the 5 over the 20 and the 20s over the 50, so intermediate term strength as well. No real weakness showing itself yet for the Information Technology Index. Here's the 6-month chart of the S&P 500 Consumer Staples Index. And as you can see on this chart, we had a bottom on November 6th, a really nice surge to the upside, which pretty much ended on December 19th, and then a month, 3 weeks or so of sideways movement, and then here on January 16th, it broke above that consolidation area right there to a new surge to the upside. So for the last 7 days, consumer staples have been in a nice steady uptrend. That 5-day moving average here in red is pulling away rapidly from the 20-day, indicating very strong strength in the short term, and that 20-day moving average is above the 50, indicating intermediate term strength as well for the consumer staples stocks. Here is the S&P 500 Industrials Stock Index, and it's been pretty much flat for the last week or so. You can see that we're at the same spot we were on January 11th. We made a high here on January 12th, came back down again, and then just have gone sideways for the last 7 calendar days. We may have a top here. You can see the 5-day moving average in red. Kind of does look like it's forming a top, but the last week of January here will say a lot as to where the industrials are going. But as of right now, we still have strength with the 5-day average above the 20 and the 20 above the 50. And we have intermediate term strength as well in the industrials stock index. Here is the chart of the S&P 500 Utilities Stock Index for the past 6 months. And for the last week, it has pretty much gone sideways. It looks like we were about right there when the last video came out. So we went down just a little bit more, bounced up again, and came back down again. But really what this chart is showing me as of now is there's still no real sign of life here in the S&P 500 Utilities Stock Index. So we need to see that 5-day moving average in red start to turn up and head toward that 20-day moving average. But as of right now, nothing looks really good here in the utilities world, so we'll just kind of have to wait and see where the last week of January takes us. But that chart shows short-term weakness and intermediate-term weakness because that 20-day moving average in blue here is pulling away from the 50-day moving average, which is our intermediate-term indicator. And here is the all-star. For the last 2 videos, the Consumer Discretionary Stock Index just continues to just be absolutely amazing. Not sure where this thing's headed, but as I said in my prior video, this thing is starting to go parabolic, and that basically means that starting down here around August, the rate of increase is getting faster and faster and faster, and it's starting to go almost vertical. And if it doesn't slow down and starts to point straight up, that is an extremely euphoric stock market psychology indicator. Straight up parabolic moves are usually not ones that end very well for the investor. A parabolic move usually corrects rapidly to the downside. But I don't make any predictions. We'll just have to wait and see what the Consumer Discretionary Stock Index does. But as of right now, that the price is beautifully above the 5-day moving average. The 5-day is well above the 20. The 20 is above the 50. So we've got short, intermediate term strength here on discretionary. Everything looks beautiful. and we're just charging to the upside. So we'll see where the last week of January takes us. Here we have the 6-month chart of the Dow Jones Financials Stock Index. You can see a pretty beautiful looking chart starting back here on September 7th. Had a nice surge to the upside, and then 3 or 4 weeks of sideways movement, another surge, and then another 3 or 4 weeks of sideways movement. And then on January 2nd, we began this new up leg here, and the price is trending beautifully at about a 45 to 50 degree angle here. So a lot of strength over the last 3 weeks. The 5-day moving average in red is pulling away from the 20, showing very strong action here in the short term. And then that 20-day moving average in blue is well above the 50, indicating intermediate term strength as well for the financials here, which is also the major U.S. banks. Here is the S&P 500 Energy Stock Index, and again, looking at this, we've had about a week of sideways movement. We had this peak on January 12th, and it wasn't until the 22nd of January that we popped up above that, made a new high here, and then on the 24th, which isn't on this chart, we had a nice, let's see, the 24th we had another sideways day on some of these energy stocks, so not a lot of change. This chart says just about everything. The 5 is above the 20, short-term strength, 20 is above the 50, and pulling away, showing increasing strength on the intermediate term. So right now everything's looking pretty good for the energy stock index, and that can be expected because over the last, I don't know, 8 months or 12 months, oil's gone from $43, $46 a barrel all the way up to about $65 a barrel. So oil prices have gone up 50% per barrel, and that's just filling the bank accounts with the oil stocks. So that explains why a lot of this strong price action is happening in the energy stock index. Here is the 6-month chart of the S&P 500 Healthcare Stock Index. Long wait here from September 12th all the way over here until January 2nd. No movement at all until basically we broke above the December high and this October high. We did that on about the 3rd of January. And ever since we broke those 2 prior highs, boom, the healthcare stocks have just taken off on a nice strong uptrend here. We had a down day on the 23rd of January, and the 24th was a slightly positive day. So right now for the week ending January 26th, we have strengthening price in the short term, because you can see the 5-day average in red is pulling away from the 20, and the 20 is pulling away from the 50-day moving average in purple. So we have strength increasing on the intermediate term as well for the healthcare stocks. Here we have the 6-month chart of the Dow Jones Real Estate Stock Index. These are commercial real estate owners, and they have been kind of following the same weakness pattern as the utilities stocks. We've been in this downtrend since about December 18th. We came all the way down, made a low here on January 12th, bounced, made a new low on January 18th, took off here and peaked on the 23rd of January and had a slightly down day on the 24th. So as of right now, the question is, where is this going to go? Is it going to go lower or higher? Well, we have a slight bit of problem with the real estate. If I zoom out a little bit, you can see that this low that was made on October 26th coincides with about this high here. That's because this low is what we call in the technical world resistance, and it came up and hit it and it wasn't able to get above it. It turned right back down again. So this October 26th low is a wall of resistance that these real estate stocks need to get above before we can take it seriously. You also had similar lows here on August 18th last year and August 11th, and then you've got this one up here. So lots of resistance that real estate needs to get above before we can confidently say it's going to do anything positive for investors. We do have a bottoming right now. The 5-day moving average in red has bottomed and is trending up, and we'll just have to wait and see if that 5-day average crosses up and above the blue 20-day moving average to get us that short-term strength indicator. But as of right now, we have short-term weakness and intermediate-term weakness for the real estate stock index. Last week I showed you the dollar index chart because I said here we all are, we're all Americans, we all have dollars in our bank accounts and in our wallets and our purses, and it's important to know what is going on with not only our currency, but it's also known as the world's reserve currency. So last week we were sitting somewhere, let's see, probably about there on this downtrend. So we started on January 9th and we slipped all the way down here till the 16th of January, went sideways for a few days, but then starting on the 22nd of January, the dollar has just taken a pretty serious beating. And if you zoom out, like I did in the prior video, to see where we were in years past, you can see that the dollar is now back to where it was. The value of the dollar with respect to the other world currencies is now back to where it was in December of 2014. And in the prior video, I also showed these highs from 2008, 2009, and 2010. This top right here, this top right here, and this top right here. That is a spot where the dollar might have a little bit of strength, but if we start to cut in, which we did today, we closed inside this highest one here. If the dollar doesn't show any sign of turning around, then the dollar is going to lose about another 10% of its value with respect to the other world currencies, mostly the euro and the yuan and the yen and stuff. In the disclosures of this video at the end, you can see what the dollar index is based on, what different currencies it has in the index. But as of right now, the dollar is falling, and it's kind of an interesting thing to be watching because it will play a role in many of the industry sectors and as well as many of the investments overseas. Thanks again for taking time out of your day to watch this market update. I hope the charts and information was useful to you. It has been a pretty quiet week in many areas, but that breakdown in the US dollar is something that is rather, something that is very significant. We haven't been this low in years on the value of the US dollar regarding the other currencies. So we'll just have to wait and see where the week ahead takes us. If anything comes up that I feel you should know, I'll make a video in the meantime, but I'll go ahead and leave it at that. And if you could do me a favor though and click on the subscribe button on the YouTube channel and then click on the little bell there that says alert me to all new videos when available. And then if you use Facebook, LinkedIn, or Twitter, please look up Christensen Wealth Management and go to those pages and then like or follow those social media sites. Those sites I can use throughout the week when I'm not making a video to provide timely content and other market-related information. So with that said, have a great day, and I look forward to talking to you soon. Bye-bye.